Hello, friends. So today we'll be looking at quantum something which is very unique to quantum long-term equity and quantum ELSS, that is the upside potential. So uh, before getting into the upside potential, I just want to talk about what are we exactly trying to do in this fund in terms of stock picking. So if one were to look at it, our whole endeavor is to correctly, first of all, estimate the intrinsic value of the company. And once we have correctly identified what is the intrinsic value of the company, we would try and buy that company at a discount to that intrinsic value. The discount that we put is at least 25%. It could be greater in some of the cases. So if you are able to buy a company at that particular discount, so the realized, if our thesis is true and the stock moves to intrinsic value, to its intrinsic value, we realize close to 33% total return, which roughly translate to 15.5 CAGR returns. Now, this is two times the government GSEC yield that you get, so which is what we are trying to do. So how do we go about doing it? And what is our track record in terms of doing that? So this is something interesting. It is called portfolio upside potential. Let me define the terms for you. So if you were to look at any stock in our portfolio, we have close to over 30 of them. We have a clearly defined buy and sell price on each of those stocks. And this is looked at from a 2-year perspective. And if a stock is below that buy price, we tend to add to it. If at all it is near the sell or above the sell, we'll either sell out or trim pretty aggressively. So at each point in time, we know what could be the upside that we can get from the stock if we multiply this return expectation with its weight. Now, if you were to aggregate this across all the stocks that we have in our portfolio and compute the total return multiplied by weight, we arrive something called a portfolio upside potential. The orange line that we see is the upside potential since almost 2008. That is the first time that we started tracking this particular number. The blue line that we see is the actual upside, NAV movement of quantum long-term equity NAV, right? So this is post all the expenses that we have in the scheme. If you were to put these charts together, what we see is there is a very tight fit between what we expected in terms of an upside potential and what was realized, that is the blue line. Barring certain global dislocations like global financial crisis or COVID-19, where the intrinsic value of the stock differed from our upside potential because there was a sudden shock to the system, by and large, the upside potential has converged with the actual NAV. If you were to look at fairly long period of time, the actual return that we realized since inception is close to 13.8, and the estimate that we do, net of all the expenses is close to 13.5, again highlighting a very close fit between the two. So let's look at some of the instances where investors really got a sudden shock. For example, let's look at the global financial crisis when all the world leaders were saying, were contemplating about what is happening, and a lot of us were kind of clueless. We estimated the upside potential at that point in time to be about 147.85. And the reason that we did this is because there was this most of the market was on fire sale. If you were to look at many good companies had dramatically fallen across the board. So when we looked at our portfolio companies, this 147 perhaps was the upside potential at that point in time, and the realized return was close to about 180%. The same thing happened in the COVID crisis. Again, this pandemic was out of the blue, and there was no clarity. There was a lot of uncertainty. But amidst that, when we looked at portfolio companies, the actual upside potential was close to around 69.8%. We cut these numbers because we are factoring in, the original estimate was much higher than that, but because we are factoring in 2 months of lockdown, and we thought, companies would not be able to garner any revenues and they would have to support the operations running at cost, which brought down our upside potential. But nevertheless, 69.80 was what we forecasted. And against that, the market went up, much higher. It was close to about 106%. And more recently, it would be fresh, before coming to that, if you were to just look at across, this is another representation of those time period, especially when there are shocks to the system. Uh, there could be periods where upside potential could differ a bit from the intrinsic value because there are sudden shocks to the system, but when they come out of it, they more or less converge. This is something which is more recent when the Fed started hiking the rates across the system, and even it was followed suit in India as well. At that point in time, again, the markets cracked. And when we looked at our portfolio, the upside potential was close to around 43.09, how we expected the portfolio to behave 2 year out. And what actually came to be was around 54%. So fairly close. So just to highlight these, that our process, if you were to look at, all these data points that are pointed out, uh, kind of works. And there is a very close fit between what was realizable and what the actual NAV came to be. Sometimes what we have seen is our estimates, we are trying to be a bit more conservative, and the numbers tend to surprise more on the positive side, as we highlighted in some of the case studies that we did. So, in all, we want to say that if you were to what to expect from quantum long-term equity and quantum ELSS funds, there would be the three key trends that we practice are: one is on valuations. We are cognizant of the valuations, we are cognizant of the liquidity, and we are extremely cognizant of also the governance structures in the company that we invest. So thank you, friends. Thank you for the patient hearing. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.